This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 10th, 2011. Our time is 8:41 in the morning, Mountain, 10:41 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. For those that listen in Edmonton, next week, our show is either going to run at noon or 1:30, so stay tuned to 630 CHED. They will tell you when we're going to be running. It's due to the fact that the Edmonton Eskimos are playing in the Western semifinal this weekend. If they win, we will be on the air at noon. If they lose, we will be on the air at 1:30. So good luck to the Eskimos as they play the Calgary Stampeders in the Western semifinal. Last week, we talked about the sovereign debt crisis over in Europe, and we said it's not over. Everyone was saying, they fixed the situation and Greece is going to be okay. We said, wait a minute, what about Italy? What about Spain? What about Portugal? And Italy blew up big time this week. Italy's debt woes signal a new, even more dangerous phase in Europe's debt crisis, according to Mohamed El Aaron, who's the co-chief investment officer at PIMCO. And Harold, it is a very scary time to be an investor because things are moving so quickly, and much of it is beyond our control.
Not only beyond our control, beyond our comprehension. Most people cannot even understand the severity of what's happening in Europe and how it's going to affect all of us. So, again, it's a very concerning time. The markets are extremely volatile. One day the market's up 400 points, the next day it's down 400 points. I mean, it's absolute insanity what's going on. And again, when you've got countries going bankrupt, the amount of money that we're talking about is absolutely astronomical. And the fact is that, Europe is Europe, but Europe, everything is intertwined. All the banks are intertwined, the derivative markets and everything. So, again, these are amongst the most confusing and dangerous times we have ever seen in the marketplace. And, again, most people have never gone through anything like this. So it's a time to be extremely cautious. And, again, the markets are certainly confusing also because they don't know what to do. One day the gold market's skyrocketing, and the next day it's down type of thing. But the markets are very volatile all in all and still very, very bullish on the hard asset market. That's where the money has got to be put because, again, currencies as we know them, some of them may not be here. We've been saying this for the last couple of years that the euro probably will not be here in the next year to 2 years. So, again, the situations are dire. They're very confusing, and we're here to try to make some sense out of everything and give you advice as to what you should be doing. First of all, the gold market had a good week. The gold market hit 1,800 but did not close above it. And there is a little bit of resistance at the 1,800 level, nothing major, because we've already broken 1,800 and been to 1,900. But again, on the short term, there was resistance at the $1,800 level. We're trading right now, as we tape this show, at $1,750. Once we break 1,800, we could finish off the year at 2,000. In fact, we have a very, very good chance of closing the year at 2,000 or slightly higher. Silver market's the same thing. Silver's been very active. We've had some tremendous days this week, but all in all, the silver market has a little bit of resistance at the $35 level. We need a couple closes above $35, and then we should hit the next resistance level, which is $38 silver. If we can break $38, we've got a very good chance of seeing the market hit $44 to $50 before the end of the year. The currency markets have been obviously crazy, and that's understandable with what's happening in Europe. One day the dollar is strong, the next day the euro is strong, and again, neither one of them are a strong currency. But again, it's very, very important to watch the currency markets because the currency markets are the secret to everything that is happening financially in the world. So basically, as we're sitting, the U.S. dollar is down 19 points on the day. We're trading right at around 77 cents in the U.S. dollar. The oil market has been on fire. The oil market is trading right now at $97. It was only about a month ago that the price of crude oil was down in the $80 range. So again, we're getting a strong rally in crude oil. And even with the problems going on in Europe, oil is still rallying, and that tells me that there's a potential problem in the Middle East. You know, the thing is that we've always felt that Iran, the closer they got to nuclear weapons and nuclear their nuclear plants operating, that Israel was going to have to do something, and we're coming very, very close to that. That's why you're seeing that the oil market at this point has been extremely strong, especially this week, and again, we're approaching $100 oil. So basically at this point here, there's a lot of confusions in the markets. We're coming to Edmonton on November the 28th to do a seminar to clean this whole thing up, to explain to you what's going on, what the dangers are in the market, and what you should be doing to protect yourself going forward. The next 5 years could be the most unbelievable years that we've ever experienced, and we want to make certain that our clients and listeners to our radio shows understand exactly what the risks are, what the potential rewards are, and what you need to do to get ready for the next 5 years, especially 2012. 2012 could be one of the most extreme years that we have ever seen, and again, that's just right around the corner. We will be coming to Toronto, which is my hometown, sometime in the springtime, and again, we will be doing a large seminar there also. But again, with the confusion in the market and everything that's happening in Europe, it's imperative that we understand what we need to do, and the most important thing is to be extremely conservative. If you are speculating in these markets, again, you're at a huge disadvantage. These markets are up one day, down the next, and there's no trend to them, again, until we figure out what's really happening with the currency markets in Europe. So all in all, what we anticipate happening going forward into the end of the year, and again, a lot of it has to do with Europe, and again, we'll revise this each week as we have to, but there's still no doubt that we're in a very bullish market in gold and silver. In fact, if you look at the commitment of traders report that comes out each week, it shows that those heavy short positions that were in the market before, that forced the market down to $26 a few weeks ago, are out of the market now, and is a very bullish formation in the futures markets for gold and silver. So again, we do anticipate that once we break and close above $1,800 gold, we should get a nice run at the high, which was $1,900, and quite possibly finish out the year between $2,000 and $2,200, depending on how severe the situation is. Silver, we'd like to see two closes above 35. See it break above the $38 level, which is a very important number because that's where the market broke down when the market went down to $26 last month. So again, I think that once the market gets back up to 38, you're going to find that the investors and the speculators that stayed with their positions are going to find that that was their break-even point again. So again, $38 is a very important number. Once we break above that, which I'm very confident that we will, we'll make another run at that $50 level in silver. Again, you don't want to be in the paper asset markets because they're crumbling all over the world. These derivative markets are so dangerous, and the reason that I'm saying that what happens in Europe is going to affect us in a huge way is because the banks trade with each other. And basically, not only do the banks trade, monies, but they also trade these very, very difficult to understand and very risky derivative markets, which again, most people don't even have a clue how they work, and when you start to unwind them, the difficulties are there, and again, the dangers are there in the market. So all in all, now is the time to be extremely conservative. Now is not a time to be speculating and trying to get rich quick. That's never going to happen in this market. One day the market's up, the next day the market's down, and again, with the U.S. in such huge financial trouble, and now Europe in such huge financial trouble, you don't want to invest in stocks in those countries because, again, there's no upside. The fact is that the governments are doing everything that they can, especially in the United States, to keep some type of semblance of order in the stock markets type of thing. But if these markets were allowed to trade on their own, there's absolutely no doubt that there's potential for the stock market to drop back down to that $6,500 level that we saw in 2008 when all the markets crumbled when Lehman went out of business. There's a lot of similarities, but what happened in 2008 with Lehman and the banks going under and all the brokerage firms going under and all that, very similar situation to what's happening in Europe right now, and guys like Rogers and other people like him believe that it's a 100% chance that we're going to see a repeat of 2008. So we have to be smart about what we're doing at this point. The risks in the market are gigantic. And the fact is that, it's only human nature that when you don't know what to do, most people will do nothing. But the fact is that, if you're in your 50s, 60s, 70s type of thing, and you were to lose your money at this particular time of your life, the chances of making it back are slim to none. The fact is that there's no money to be made in the stock market, and there's no money to be made in the real estate market, and that's where most people made their money back in the 90s and into the first part of the 2000s. So, again, to make money again is extremely difficult. Back in the back in the 90s, you could have thrown a dart against the Wall Street Journal and picked a stock that was going to double or triple. Those days are over. And the fact is that you don't want to be in those markets at this particular time because there's no reason to be investing in mutual funds when most companies are not doing well. A lot of investing is common sense. And the fact is that common sense tells me that it's a time to be in cash and to be in gold and diamonds and silver. Those are the areas that are the strongest. Those are the areas that will respond the best to these type of dire situations, especially if Europe implodes. And again, according to what I'm reading, and other people are also saying the same thing, it's very possible that this is going to happen in a very, very short period of time. So again, over the next couple weeks is a very important time. And again, we're coming up to Edmonton on the 28th, which is in the next few weeks, to explain what is happening and what we need to do. So go on my website, HESradio.com, HESradio.com, and sign up for our seminar. It's a free seminar. I don't want anybody paying to come to listen to us speak. Again, it's extremely important that we understand what we need to do to move forward and to protect ourselves going into the most troubling financial times that we have ever seen. And the fact is that we're coming up to the West Edmonton Mall at the Fantasyland Hotel on November the 28th to do a seminar. And the fact is that it'll be a large seminar. It'll be loaded with information that you need in order to make an intelligent decision as to what you're going to do moving forward. Randy Marshall is going to be there. I'm going to be there. Our friends from Worldwide Precious Metals are going to be there. Also, I have a special presentation from Argyle on what's happening in the diamond market, which is just absolutely exploding. So go to our website, HESradio.com, HESradio.com. Sign up for the free seminar. You can let us know how many tickets you want. And again, it will be a pleasure to see you in Edmonton on the 28th. It's probably one of the most important times that we've ever been through. And again, I'm going to be leaving Florida at 80 degrees and coming up to Edmonton at probably below 20. There'll be a 100-degree temperature change that day. But again, nothing is going to stop us from coming up and explaining what we need to do moving forward. Again, the metals markets are looking very strong at this point here. I'm very confident moving forward that gold and silver are two areas that will save us financially, but you really need to know what's going to happen in the paper asset market. So again, with the new news coming out about Italy, Greece is not doing any better than it did a couple weeks ago, and don't forget there's Portugal, Spain, Ireland, and many other countries right on the horizon. So the situation in Europe is dire and is going to affect us in a massive way. Make certain that you get the newsletter this week. Randy did a phenomenal job, found all the information that we need in order to make an intelligent business decision. So again, get the newsletter this week, read it thoroughly because there's very important news in there. Again, if you're not in the gold and silver market, silver at $33 to $35 is a steal. And again, we anticipate that before this whole thing is over the next 4 to 5 years, we'll be looking at silver at $150 to $200. The other thing is watch oil. Oil prices are skyrocketing. We're up to $97 oil. There's no doubt in my mind that we're going to break 100, go to possibly $150 to $200 in oil, and that could happen sooner than you think, especially since Israel possibly is going to attack Iran. It's reached a point that Iran is just a catastrophe waiting to happen, and again, the threats towards Israel, leaves them no option. I don't see any way that Israel is not going to go in there and try to get the job done. And I know that the U.S. and France and most countries won't back it, but again, they're not living in the Middle East, surrounded by these type of dangers. So again, watch oil because oil could skyrocket. It is right now, and add that to the inflation of high food prices and weak dollars all around the world. We're looking at a situation where oil, food, gold, silver, diamonds, all these assets will skyrocket in price, and it's going to happen a lot faster than most people think.
The telephone number to invest in precious metals, 1-866-623-2002, 1-866-623-2002. There's only one company that Harold recommends you use when it comes to investing in precious metals. That's Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. If you'd like to receive our free weekly newsletter, speak with them. They'll send it out to you free of charge via email every week. 1-866-623-2002, wwpmc.com. Harold was talking about oil. There was an interesting stat I heard on the Canadian Business Channel this week that Saudi Arabia needs $90 a barrel oil to keep everything going in their country. And that is a large number. Obviously, that's positive for Canada, Alberta, the oil sands, because that number obviously is a positive number for those in the oil patch who need higher prices to make money. Obviously not so good if you're driving a car. One of the other stories that I heard, and Harold is right, one of the reasons oil is skyrocketing is people are concerned about Iran being attacked. And there's even talk of possibly the United States getting involved. James Turk put out a story this week. It was on King World News. He actually expects cataclysmic events in the coming weeks. He said, we had a major development here in Europe today, November the 9th. Yields on the 10-year Italian bond soared over 7%. That's 7% hurdle is considered critical because once Greece and Ireland went over 7%, they turned to the EU for a bailout. So the thinking is now Italy needs a bailout too, but there's a problem. Italy has 2 trillion euros of debt. That's greater than the total amount of debt owned by Greece, Ireland, Portugal, and Spain combined. It's the 4th largest amount of debt in the world. It's estimated that over half of it is owned by banks around the world, 400 billion euros of it owned by French banks alone. As I mentioned in a previous interview, they can no longer kick the can down the road because it's become a 2-ton boulder. And he summarizes the EU and the IMF telling Italy that it must adopt austerity measures is basically about 5 years too late. The Italian government cannot cut fast enough to improve their financial picture. The bottom line is the fallout from Italy is going to get very bad very quickly. The IMF's Christine Lagarde came out and warned and the risk is of a lost decade for not only the EU, but for the entire world. And it was interesting, the Republican debate was on CNBC last night, and Ron Paul, who's running for the Republican nomination to be the presidential nominee, said that just look at Italy. The United States, that's going to be us. We're Italy in a few years if we do not deal with the situation that we have. The United States is approaching their $15 trillion debt limit. And in our newsletter, we have the U.S. debt clock. We also have a Canadian debt clock. And the United States starts their fiscal 2012 year with a deficit. They've already racked up a deficit of $95 billion in that debt panel that is going on between the Democrats and the Republicans in the United States. They have hit, no surprise here, an impasse. And if that happens, there's going to be serious ramifications for the United States and their budgets because some automatic cuts come in, and these cuts are very, very severe. One of the stories that caught my attention, Fannie Mae, and that was one of the topics last night on this debate. A lot of people are saying, a lot of the candidates are saying, we need to get Fannie Mae down to a smaller size, let small banks get into the market of lending money for people to buy homes. Fannie Mae, Freddie Mac, they're actually about 90% of that market. They control 90% of it. They're losing tons of money. In fact, they need another $7.8 billion after another record loss of $5.1 billion. That's Fannie Mae. Freddie Mac in trouble as well. And Jefferson County filed for bankruptcy. It's the biggest municipal bankruptcy in the United States. And, Harold, it just continues to go on and on and on. In fact, there were 2 more bank failures in the United States, 87 for the year. There were banks that were closed in Nebraska and Utah. And it's just one of those things where we're in a time where people need to have an allocation of precious metals in their portfolio. They need hard assets. They need gold, silver, diamonds. To invest in precious metals, the telephone number 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. One thing I wanted to ask you, Harold, are you completely booked up now for private meetings with people that wanted to meet with you on Tuesday?
Yes, I certainly am, but for Monday and for Tuesday. So we've had a huge response. But what I will be doing is staying behind till everybody is gone from the seminar. So the seminar is going to be from 6:30 till 8:30, but I will stick around till at least 11 o'clock to meet everybody and answer everybody's questions. So I'm going to be there for all day Monday, all day Tuesday, and we're going to see as many people as we possibly can. So it's going to be an amazing seminar. I'm really excited about coming up, but again, with the new results that are happening again in Europe and everything like that, it's never been more important to clear up what's really going to happen going forward. So again, it's a very important seminar for all those that are concerned about the future and what's going to happen with their money. You need to come to the seminar, and we made it a free seminar so everybody can come and see us. Again, to me, that is not important for somebody to pay to come to see me speak. Again, I've been on the radio in Canada for over 15 years, and we've helped an awful lot of people. And again, we're coming up to make certain that everybody understands what they need to do going forward.
Now, worldwide, they were also meeting with people. Are they booked up, or can people still contact them and set up an appointment?
I believe you need to go to their website, wwpmc.com, and see if they still have appointments available. I believe they still do. So, again, I'm very much looking forward to coming up there. It's going to be an amazing seminar. You're going to learn a tremendous amount, and I'm looking forward to seeing all my friends and clients.
Connect with Worldwide, wwpmc.com, the telephone number 1-866-623-2002 for tickets, free tickets to the seminar November 28th, 6:30, Fantasyland Hotel here at West Edmonton Mall, HESradio.com, HESradio.com. Some of the most bullish news this week, and Harold, we have about 4 minutes left in our segment here, on silver. People are extremely bullish on silver. Morris Hubbard said this week, with silver, I'd rather be a month early than a minute too late. Smart money buyers have quietly added in size to their positions on the latest price weakness. All the technical pieces are falling into place to help multiply your wealth with silver. John Embry expects $70 silver within months. If you look at silver, there is no bullish sentiment. The reason for this is, up until now, there's been a wall of paper selling that's keeping silver trading below 35. And silver has been subject to a couple of vicious attacks recently. So I think people are uncomfortable, but at the same time, people who buy physical silver, and that's all I buy, he said, we're going to be delighted. I mean, it's hard to get silver, and you have to pay premiums for it. The real price of silver is in the physical market. This paper market is completely and utter sham, and when the paper market is broken, and I think we're close to that happening, silver will double overnight into the 60s to 70s, and that could happen within months. Also, Robin Griffiths came out and said, silver is a 10 or 20 bagger from here. Until there's more confidence in gold, I don't think you're going to find a runaway confidence in silver either. So on the slightly fickle trading swings that obviously create a higher beta play with silver, there is going to be some volatility. But I believe going forward, silver will be a 10 or 20 bagger. One just has to tolerate the short-term volatility. Capture the short-term volatility, obviously, that's hard to do. So basically, buy silver on the dips. In other words, just live through the volatility. I don't know any other way of handling it other than that. Also, Ben Davies came out with a silver update. He says silver is going through an interesting dynamic. I believe that MF Global, the margin calls, caused some damage to silver last week. I also believe that that was your last chance to buy silver before we take a run to the 50s and even higher over the next few weeks. And that was, Harold, we have about 2 minutes left here. That was one of the things that we did hear about silver, is that MF Global, which they were obviously trading in the paper market, derivative market, and they had a lot of shorts in silver. They have basically been cleaned out now. A lot of people believe with the Commitment of Traders report the setup for gold and silver is very, very strong. The beautiful part about it is that sentiment is not super strong towards gold and silver right now, and that is an excellent time to obviously make an investment.
I believe so. In all the years that I've traded those markets, these are the situations personally that I look for. But again, we've always advocated buying the physical metal, paid for metal, and holding it. And the fact is that our clients that bought silver, 10 years ago at $4 for $40,000 for $10,000, no matter what, is still up to $350,000. So the fact is the volatility is good if you want to see much higher prices. The volatility is not good if you're trading the futures market and heavily leveraged. So all in all, if you're owning physical gold and silver and you're just sitting back, these pullbacks mean absolutely nothing. It's only when you get caught up in heavy leverage that those leverage situations are going to hurt you. We feel that silver could be a $200 metal before this whole thing is over. If silver's at $35 and you bought 1,000 ounces for $35,000 and you sold it at $200, even on the most conservative basis, you've actually made 600% return on your money, and that's what we've been advocating all this time.
The telephone number to invest in precious metals, 1-866-623-2002. The website, wwpmc.com. There's only one company that Harold recommends you use when it comes to investing in precious metals, worldwide precious metals, 1-866-623-2002, the website, wwpmc.com. Speak with them about meeting with them when they're here in Edmonton for the free seminar. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on November the 10th, 2011. Our time is 9:08 in the morning Mountain, 11:08 Eastern. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, they are all archived at Harold's website, HESradio.com, HESradio.com. There's only one company Harold recommends you use when it comes to investing in precious metals. That is worldwide precious metals. Their telephone number, 1-866-623-2002, 1-866-623-2002. You can get our free weekly newsletter. Sign up for it. We'll send it out to you via email free of charge every week. A note for those that listen to our show in Edmonton. The West semifinal is this Sunday. We're hosting it at Commonwealth Stadium. The Eskimos playing the Calgary Stampeders next week. If the Eskimos win on Sunday, we will be on at noon. If they lose, we will be on at 1:30 on 630 CHED. So keep that in mind. Next week, Eskimos win. Obviously, we want to be on at noon. And if not, we will be on at 1:30, and the Eskimos obviously won't be in the Western Final against the BC Lions. But good luck to the Eskimos. Harold is coming to Edmonton, November 28th, 6:30, Fantasyland Hotel. If you'd like to sign up for free tickets, go to his website, HESradio.com, HESradio.com, November 28th, 6:30, at the Fantasyland Hotel. His other website is rarecoloreddiamonds.com, rarecoloreddiamonds.com on the website. We have our featured diamond of the week. This week's diamond is a 1.12 carat cushion-cut, fancy intense, yellow internally flawless diamond. The color of this diamond is sensational. It's very, very intense. You'll see it with the video in the picture. Harold highly recommends this diamond as a strong investment. It will do very well during inflationary times. And I should mention, it's going to be next week a major week for diamonds. Christie's and Sotheby's holding sales in Geneva, Switzerland, Wednesday. That massive Sundrop diamond, what is it, 115 carats, will be sold next Wednesday. A story that I found on Bloomberg this week really says it all when it comes to the diamond market. I read it to Harold, and he was ecstatic. Diamond miners are struggling to keep pace with growing consumption in emerging economies as older mines are exhausted and producers lack new discoveries. Supplies of rough diamonds, which are turned into polished diamonds, are forecast to remain flat in the next 5 years and will fail to match demand driven by China and India, according to RBC Capital Markets. We're seeing in the first half of this year a tremendous increase in demand coming out of emerging countries as well as developed countries, according to Cynthia Carroll, She's the CEO of Anglo American. In 2005, India and China represented about 8% of demand. By 2015, India and China and the Gulf, which is the Middle East, the Gulf Coast there, will represent about 40%. You heard right, from 8 to 40%. The market is very, very strong. Demand will outstrip supply. Harold, think about it. 8% to 40%. I'll tell you, you look at what's happening with the Argyle pink diamonds with the mine shutting down, and you know you've got a winner there when they produce about 90% of the world's pink diamonds, 95%. And then on top of it, you have a tight market all over the world and increased consumption from India and China. You don't want to say it's almost a can't lose, but I'll tell you, the wind is definitely at our back.
Well, it's a phenomenal situation. Again, I can't be more pleased with what's happening in the diamond market. I've been in it for a long, long time, and I've been through mines closing, and I've seen what happens during times of inflation and see what happens with diamonds. So, again, I'm very, very pleased to have brought this to our clients and listeners to the radio show, because in all honesty, there's not a better investment at this particular point than to be in diamonds. Let's face it, with what's going on in Europe, with the potential of Europe going under, with Greece and Italy especially at this point, and the potential ramifications in the currency markets, and with banks and people running to banks and pulling their money out of the banks, you need to own a secret asset, and diamonds have always been that type of asset. But we're not talking about just any diamonds. We're talking about extremely important diamonds like yellow flawless diamonds and Argyle pink diamonds. The fact is that white diamonds do very well, high-quality white diamonds do very well during times of high inflation and financial uncertainty, but nothing does better than colored diamonds because they're extremely rare. So there's two situations that we recommend very strongly, and it's never been more important than now. We could wake up one day within the very, very near future and see two massive situations happening. One is the destruction of the banks in Europe, which will also affect us in North America, which could absolutely cause a run on the banks, people basically lining up to take their money out of the bank and burying it in their backyard or putting it in their mattress type of thing. And that's something, again, that is extremely possible and could happen within the very, very near future. So, again, we could see runs on banks, and we can see currencies that we depend on not being here anymore. So it's a very difficult and confusing time, and basically you need to be in several different markets. One of the most important things that you could do is keep some cash on hand. You need to be in gold and silver because, again, they're a hedge against inflation. And with inflation coming, we're at $96 oil as we speak, possibly going to $150 to $200 if something happens in the Middle East, which is very possible. That would cause inflation to skyrocket along with the extremely high price of food, and, again, with weak dollars all around the world. So you really need to be in a situation that you probably have never been in before, and you need to be in the hard asset market. All you need to do is go back in history and realize what happened back in 1979-80 to the price of gold, silver, and diamonds. Gold went from $35 to $850. Silver went from $1.25 all the way up to $52, and in 2 years, colored diamonds went up 500%. So you really need to put some money into the diamond market. It's a portable private asset that you may need in order to trade for food or services or get across another border. And a diamond is the only asset that is portable private wealth. But in times of high inflation and world uncertainty, diamonds have a track record. Yellow flawless diamonds, and it's only yellow flawless diamonds, not the VVS1s or the VVS2s or VS1s or anything like that. It's got to be an internally flawless yellow diamond, and it's got to be a fancy yellow, fancy intense, or fancy vivid. Those are the three best colors. These diamonds just normally go up 25% a year, double every 4 years in price. They're becoming extremely difficult to buy. People in Asia and all over Europe are converting their weak currencies into diamonds. That's why there's another shortage in this market. Now, yellow flawless diamonds back in 1979 and 80 went up 500% in 2 years. Means that if you invest $20,000 in a flawless yellow diamond, within the next 5 years, that diamond could be worth $100,000. Why do we have to be concerned about inflation? Because in most cases, most people's income are not going up, but the cost of living is going up. Oil is much more expensive, filling up your car and heating your home. On top of that, almost everything that we do revolves around the oil market. And the fact is that if oil goes to $150 to $200, which I truly believe it will and can do in the very near future, happen much faster than you would possibly anticipate, again, we're looking at massive inflation worldwide. Because, again, you're talking that food prices and oil prices will go through the roof. So that's why you want to be in gold and silver, and that's especially why you want to be in a diamond, because it's really the safest asset that you can buy. Yellow flawless diamonds, in the 35 years that I've been in business, have never, ever dropped in price, ever. And the fact is for the entire world last year, there was only about 80 of these diamonds available. And fortunately, most of those are in the hands of my Canadian clients. So basically, we just put these beautiful diamonds aside in our safety deposit boxes, and we're just going to sit back and let the markets come to us. Basically, these diamonds go up 25% a year. They double every 4 years in price. And if I was wrong on inflation, which I'm not, but if we are wrong on inflation, again, a diamond that you could put away for the next 8 years, a $20,000 diamond could be worth $80,000. And when you look at your retirement funds and putting your funds into mutual funds or stocks, there's not a chance in the world that you're going to accomplish the same thing by having your money in the stock market as you will in the diamond market. So again, for the last 35 years, this has been an asset that has never, ever dropped in price. They double every 4 years, but during times of high inflation can go up 500% like they did in 79 and 80, and that's what we believe will happen again. The reason that we say 5 years is that we know that within the United States, the Federal Reserve has come out and said on many occasions that they intend on keeping interest rates at basically zero for at least the next 2 years. That means that the U.S. dollar will continue to weaken and weaken, which will push hard assets substantially higher. That's another reason why we're so bullish on gold and silver. But again, as the dollar continues to weaken, these assets go up further and further. What's going to happen when inflation hits is a totally different story. That's when these diamonds can take on a life of their own. So basically, a diamond that you can buy today for $20,000, in 2 years from now, if we see that they keep interest rates at zero, the Federal Reserve, then you're going to start to see inflation at its highest level. That's where you could get inflation like they've talked about on some of the reports that Randy has in the newsletter, that are Zimbabwe type of inflation. That's how frightening this situation is. So, again, you need protection in these markets, and conventional investments like stocks and bonds do not do well during these extreme times. These times are so extreme that most of us have never, ever been through anything like we're going to go through within the foreseeable near future. And I know a lot of us out there are saying, well, I just don't see it yet. You know, you go to the high-end restaurants, and they're still extremely busy, and there's still people driving Jags and Porsches and everything down the street. There's a lot of people out there with a lot of money. But just like in 2008, if you don't pay attention, major part of your wealth could disappear in a very, very short period of time. Don't forget, in 2008, the stock market, the Dow Jones, dropped from 14,000 lifetime high all the way down to 6,500 and wiped out most people. So again, at this point here, you want to look at the type of assets that are going to protect you, that are not speculative, that you're not going to lose your money. And the fact is that that's gold, silver, and diamonds. So we recommend that every one of our listeners, if they're in a position to do so, is to put away a yellow flawless diamond for their future and their safety, while you can still get them. They're very, very difficult to get. I just invested a huge amount of money, $9 million, to buy the last 2 quarters of production of Argyle's production, because there's no pink diamonds available. And we bought and cut and polished our beautiful rough diamonds, and they're all going to be available over the next couple weeks coming into the seminar. So these beautiful $7 million worth of pink and yellow diamonds have just been cut and polished, and they're all at GIA being graded and coming out in time for the seminar, which again is the most important time for us, because we're heading into a time when, again, as of last night, Italy is on the verge of bankruptcy, as is Greece, as are many other countries, and we're going to see major changes in currencies. So you want to own yellow flawless diamonds for inflation and safety, and you want to own Argyle pinks for the same reason, plus the Argyle mine is closing down. This mine is going to close down, in my opinion, by 2016. There goes 95% of the world's pink diamonds. So we anticipate that the price of pink diamonds will skyrocket in price. We're already starting to see the prices from last year moving substantially higher. And again, they're still at good levels. And the reason that I invested so heavily in these Argyle pinks is because the mine is going to close and there will be no more of these diamonds available. These are amongst the best investments that you could possibly make. They're very safe, they're very beautiful, and again, they do nothing but go up in price. And during the type of economic challenges that we have right now, these are the assets that will do the best for you. The Argyle pink diamonds that you can buy right now in the $25,000 and $30,000 range within the next 8 years could be 10 times that value. And again, we've seen it in blue diamonds before, and now we're seeing it in pink diamonds. The exact same thing that is happening in pink diamonds right now recently happened with blue diamonds, and blue diamonds went up 700% in 3 years after the mine closed that produces blue diamonds. That's how important these assets are. So again, I've certainly put my money where my mouth is. I believe in these assets wholeheartedly. I invest in them substantially and am a major owner of yellow diamonds and pink diamonds. But for my clients, where it is imperative that we protect ourselves over the next few years and put ourselves in a position to make money, those are the assets that you want to buy. If you look at the auction results over the last few years, you'll see that pink diamonds have skyrocketed in price. When a pink diamond goes to auction, it sells for a literal fortune. So do blue diamonds because of the scarcity of these diamonds. And now yellow diamonds are selling for record prices at auction also. So again, there's a reason for that. People are afraid of keeping their money in cash and in currencies. And they're very concerned about keeping their money in equities, stocks, mutual funds, and bonds. So you need to diversify. You need to be in the assets that will protect you moving forward because, again, as I've said many times, most of us have never, ever gone through what's going to happen within the very foreseeable near future. You do not have to be a multimillionaire to invest in diamonds. Most of my clients that invest in diamonds invest under $100,000. In fact, most invest under $50,000. You could do extremely well with a yellow flawless diamond in the $20,000 to $30,000 range. That diamond, again, a $20,000 diamond in the next 5 years could easily be $100,000. It happened before in 79 and 80. There is absolutely no reason why it's not going to happen again. And with pink diamonds, that's one of the best investments you could ever make because anytime 95% of any commodity is going to be taken off the marketplace, the prices have to go higher. And pink diamonds are the most in-demand diamonds that there is. They're beautiful. They're in huge demand, and the news on them is every day. Everybody knows that Argyle is now going to close down. So I believe that Argyle is going to close that mine by 2016, which is only 4 years from now. Give it 2 years for these diamonds to run out. Within the next 6 years, a diamond that you could buy today for $50,000 could be a $400,000 to $500,000 diamond, and that's what we anticipate. It's never, ever been more important to invest in diamonds than it is right now with all the inherent danger that's out there in Europe and all throughout North America. In fact, throughout the entire world, because we're all interconnected banking-wise, and everybody's going to feel the brunt of what's happening in Europe. So again, it's a very, very concerning time, and you need to do the right thing. And I believe the right thing to do is to be out of the paper asset markets, to have a lot of money in cash, believe it or not. It is not a bad thing to keep money in cash. Even though you're not going to make any money on cash, you're not going to lose it like you are with your equities. And there is no doubt in my mind that the last place you want to have your money is sitting in the stock market. And it's not that I have anything against stocks. It's just not the time to be there. When a country is going bankrupt, you don't want to own stocks in that country. And that's what's happening throughout Europe and in the United States. We need to trade and invest differently if we're going to get through these difficult times. And believe me, the times coming up are amongst the most difficult that most of us are ever going to see. I've been in the investment business for 35 years. I've traded the commodity markets back in the 70s and 80s, and I've got journals on that. I've traded the diamond market back at those times. I saw diamonds go up 500% in 79 and 80. I was involved in the markets back then. So, again, I've got the experience to trade these markets. I got the experience to know what happens when certain situations are in the forefront. And again, 10 years ago, we saw this situation happening, and that's why we recommended gold when it was at $250 and it recently hit $1,900. We recommended silver when it was all the way down at $3.80 and it was recently at $50, and the price of diamonds have exploded. So again, my strongest recommendations are, number one, to get into the hard asset market, and number two, if you're in Edmonton on November the 28th, you must attend this seminar because the information that we're going to give to you is extreme. What I'm also going to do is I'm going to video this seminar. So I'm going to make DVDs, and every one of our listeners all around the world will get a copy of this DVD, and you'll be able to view the actual seminar, and it's going to be outstanding. It's going to be, again, on the world markets, what we foresee happening over the short term and over the next 5 years, what's going to go forward going into 2012. Worldwide Precious Metals is going to be there. They're going to do a precious metals presentation, and I'm going to do a presentation on diamonds, and Argyle has given me some very amazing bits of not only information but some of their case pictures of their mines and diamonds. You're going to be blown away by this presentation, but more importantly, you're going to be able to walk out of there with a much clearer picture of what you need to do going forward. So again, it's November the 28th, a Monday night, 6:30 at the Fantasyland Hotel. We don't want anybody paying to come to see us, so the tickets are free, and you can go on my website, HESradio.com, sign up for your free tickets, and I'm looking forward to seeing everybody in Edmonton on the 28th.
Speak with Harold about the featured diamond this week. It's on his website, rarecoloreddiamonds.com. It's a 1.12 carat, cushion-cut, fancy, intense, yellow, internally flawless diamond. Last week's diamond, the featured diamond, went very quickly within days. If you're interested in this, speak with Harold. All you need to do is go to rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022. And if you'd like to receive our free weekly newsletter via email, Harold will be happy to send it out to you. I should mention next week will be a big week. Not only is that big, giant, yellow sun-drop diamond selling 115 carats in Geneva, Christie's and Sotheby's both having sales, and there are a lot of colored diamonds that are on auction. So we should have some good results for you next week. Tune in to next week's show. I should reiterate, next week in Edmonton. If the Edmonton Eskimos win the West semifinal against Calgary, we will be on at noon. If they lose, we will be on at 1:30 in Edmonton. To invest in precious metals, the telephone number 1-866-623-2002. The website, wwpmc.com. You can meet with Worldwide when they're here in Edmonton. You can speak with them about that. Also, rarecoloreddiamonds.com is the website for Harold's Diamonds. The telephone number, 1-800-432-1022. We have about 2.5 minutes left here, Harold. A couple of quick notes on silver again. Jean-Marie Evelard says, since I tend to look at gold as a substitute currency, I'm more interested in gold than I am in silver, but I acknowledge the fact that there may be more money to be made in the future in silver than there is in gold. Also, Stephen Lieb said this week that silver could go to $100 very, very rapidly. See that story in our newsletter. It is a must-read. We have tons of information in our newsletter. And with about a minute left here, Harold, as we said on last week's show, we are living in crazy times. And when it looked like, quote-unquote, the world was safe again with the EU bailout of Greece, we said, wait a minute, what about Italy? What about Spain? What about Portugal? And even the Greece situation isn't 100% solid. It seems to be changing by the minute. So we're in interesting times, and hard assets, we still believe, will be a winner at the end of the day.
Absolutely no doubt, Randy. Again, these are very confusing times. It's a time to be conservative and smart about your money. You make one bad mistake and you can lose a bunch of it. So, again, we don't want to see that happen. I want to wish everybody a very wonderful weekend. We tape the show on Thursday because it's Remembrance Day. We want to thank all of the military, are you kidding, for protecting our amazing country and keeping us safe. And we hope you have a wonderful, wonderful Remembrance Day.
Thank you very much, Harold. I agree 100%. Don't forget, next week in Edmonton, the Eskimos win, we're on at noon. They lose, we're on at 1:30. Hopefully you'll be hearing us at noon. Our show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, You can catch us at HESradio.com. That is Harold's personal website, HESradio.com. You can sign up for our free seminar, November 28th, 6:30 at the Fantasyland Hotel, West Edmonton Mall. You can hear the archive shows there. To invest in precious metals, there's only one company that Harold recommends, Worldwide Precious Metals, WWPMC.com, their website, telephone number 1-866-623-2002. On the diamond side of things, rarecoloreddiamonds.com, or speak with Harold at 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.